Welcome back to another episode of Loan Officer Life, where we explore what it really takes to win, serve, and lead in the modern mortgage industry. Today's guest is someone whose insights have reshaped how we at FinLocker and me personally think about borrower behavior, trust, and timing. Bruce Gehrke is the Senior Director of Financial Service Intelligence at J.D. Power. If you're a loan officer and you're focused only on the point of sale, you're already behind. But it's not too late. Stay tuned. You're going to learn. J.D. Power's 2024 Mortgage Origination Satisfaction Study revealed something game-changing. And I've been running around town on stages talking about this. Borrowers who engaged with a lender at the point of thought, before they were even actively shopping, had a 107-point higher satisfaction rating. They were also 54% less likely to shop around and 20% less likely to contact another lender. Guys, this is not about data alone. It's about direction. Bruce and the team at J.D. Power are giving us a blueprint for how trust is earned, loyalty is built, and how local lenders can thrive well before a transaction is ever on the table. So whether you're an LO, a branch manager, an executive leading a team of producers, this episode will challenge you to think differently about timing, technology, and how to own your zip code at the point of thought. Bruce, welcome to the show, man.
Brian, great to be here. I appreciate the opportunity to talk with you and talk with your audience. We've been trying at J.D. Power to share a little bit more of what we're seeing on a industry level. Traditionally, we're very focused on our customer base and working directly with clients. We have a lot of industry data. We collect all the data across all major players in the origination market from a retail perspective. And what's going on in the industry, we feel that that's something that's valuable to folks outside of our group of clients. And that is the consumers out there. So traditionally, J.D. Power doesn't do any direct to consumer messaging, but the idea here is through the industry and through what we're seeing in the industry, that this message actually gets out and comes for the average consumers out there shopping for a loan. So it's great to get the opportunity to speak with folks and share a little bit about what we're seeing. And we, as you mentioned, we started seeing this last year. It's kind of been a slow roll up until last year, where it really accelerated this concept of actually engaging with lenders prior to even looking for a home for purchase borrowers. And as our market has really focused on that purchase borrower, it's become more and more important, I think, to engage with folks at that point when they're trying to consider, is this the right move for them? Is the timing right? You know, I was just looking earlier today at some industry data and market data, and there's really no indication that I see at this point that we're going to see much change, significantly lower interest rates and anything. So this is the world that we're living in. And if you're an originator and you're out there trying to find borrowers and make loans, you really need to adapt to what folks are thinking about, what they're going through, and what's going to resonate, most significantly with them.
Yeah, and since we recorded back in December, I think it was early December, which was on the heels of you all releasing the 2024 study. And I've seen you now. I just saw you last week with Kristen Messerly and Dave Savage. And before that, you were on with Dave Savage alone. And I think I've seen you in like 3 other places. Next month, we're in late May. So next month, you're going to be in Colorado Springs on the stage with Housing Wire at the Gathering. Here we are in May. What's changed since from like today back to the 2024 study? What are you guys already seeing in kind of the early data here in 2025 as it relates specifically to borrower expectations?
Yeah, it's a good point. I mean, some of the major themes that we saw developing have become a little bit more so. So we're still seeing a lot of that same data. We are about halfway through our collection. Our collection actually runs a little bit ahead of our analysis. So we're 2 waves into the study and have talked and analyzed that data. One of the things that is developing that we didn't see certainly as strongly, we saw some hints of it in 24, but the 25 data is interesting with this perspective on the youngest borrowers in the market, what we consider Gen Z borrowers. Gen Z borrowers in a lot of different businesses are considered very digitally native, looking for digital interaction, not as focused on that personal relationship and working face to face with folks. But we're seeing this in our data. We also see it in some of the other JD Power datas, in other industries, most specifically in wealth management. So here you are in two very important aspects of a consumer's financial well-being, how they're investing their investable assets and possibly buying their first home. Two very big financial concerns. And what we're seeing is that younger group, their preference for meeting face-to-face is greater than our older borrowers. And it sort of ramps up, whereas you get into Gen X and boomers, it's even less so. And as you come down through millennials and into Gen Z, there's a greater interest in meeting face-to-face. And what's interesting is what's behind that. And as we look deeper into those perceptions and those preferences, they have a much higher preference for a digital experience than the older borrowers do. And what's happening is their feeling or reaction to what's available isn't quite there yet. And so what they're looking to do is fill in those gaps with a personal interaction, and they do prefer to do it face to face rather than on the phone. So as you mentioned in your opening, this advantage, I think, in the local loan officer, when you talk about it and you guys talk about owning your zip code, I think this environment, what we're seeing holistically across the industry from an experience standpoint, is really being dominated by those who can dominate those locales. Who is that local guy? Do you have the tools, but can you deliver it in a way that what I would call leverages that personal interaction and just takes it up a level? That's where the differentiation is coming in that we're seeing with those younger borrowers. And now in our study, we're seeing 2/3 of current home buyers, so purchase borrowers, being in that millennial and Gen Z category. So that obviously where the future is going to be, but you want to be focusing your efforts on working with those groups and effectively, meeting their needs and their perceptions and their preferences.
So we'll have a little fun with this one. You and I use this term point of thought a lot. I mean, it might be overkill at this point. And we were commenting on somebody's post. I don't remember who it was, but somebody on LinkedIn had made a post and jokingly referenced that, one of us stole from the other. And I'll admit, I'm sure I learned this from you guys.
I don't know that. I think I might have stolen it from somebody else. So I don't think it's an original concept. No. So I don't want to take, credit for that, but it's a great way to think about it. And I might have stole it from you, actually.
I'm not that smart, Bruce.
When you're when you think about these things, strategically, think about how consumers make decisions and how they consume information, and often what we see is that pathway, when it's not guided, can take you in different directions and take you down the wrong pathway. If you make one bad assumption up front, you're going in the wrong direction. So guidance and advice along this way is very valuable. And we see that across a lot of different financial products and services that are out there. And the advantage to that, and the advantage to it is, as you mentioned earlier, that earlier interaction, and I think you mentioned this, and I've used this after. So we can share a little bit here. It's about earning the right with the consumer then to present an offer at the right time. And that's a very different concept than making a pitch. And when you talk to salespeople, and not just, loan offers, but just sales in general, you talk about this a lot. And it comes from making a connection personally and building out trust. So that person trusts you. You get to the point where they almost pull the offer out from you as opposed to you putting out to them. So really, it's this difference of looking at it from inside out or outside in, and it makes a big difference in a market like this when you're looking more for that advisory interaction. Go back a few years when we had low interest rates and we were firing off refis, 2-3 times an hour or something.
Yeah.
That's a different environment, and that's transactional efficiency and getting those things. There's just a lot more into it now, and I think to play that game, there's some great tools out there. There's great tools that can help an individual at an individual level who doesn't have the budget or maybe doesn't have the type of infrastructure where you can compete with some of these digital capabilities that are out there. But there are tools, I think, that will help you as an individual play that game in a similar manner. And then you can leverage that benefit that you have being face-to-face with that borrower. And I think, as we go forward and we see how some of these the tie-ups we're seeing in the industry, these connections, the Rocket deal, what Zillow's trying to do. We've seen a couple others, and there's some other companies. I saw something in the media today about CMG talking about, a similar kind of strategy. It is something that I think we're going to see more and more of as we go forward. And at this point, I think everybody should be looking at this not as if this is a definite, for the future of the business, but if you're not thinking about how to compete against it in the shorter run, you're putting yourself at risk and you're putting your business at risk. And I think, you guys talk about this a lot. There's a lot of options available on the table, and you really have to start looking at them, making that step out there, gets outside of the comfort zone of where you've always worked before, and just maximize that and add those new tools in and capabilities, because this is where the consumer is, and you've got to, I think, get to where they are.
Well, I think everything we're talking about and your data clearly is telling us the right plays to run, right? The other thing that people need to really be laser focused on is that, last year the average age of the first time home buyer was 38, as reported by National Association of Realtors. Probably is going to be it's probably going to get 39, maybe even hit 40, when they do the next revision of that report at the end of this year. And so if we're to believe, and I know you were on with Kristen Messerly and Dave Savage and the First Home IQ team, they're hyper focused on arming that local lending professional with what I call world-class consumer financial education content, so that they can go into their communities and serve this gap in financial readiness, financial literacy, financial education. So I'm not saying that 18-year-olds are necessarily, ready to buy homes, but if the first time someone becomes, credit eligible at 18, and now if the average age of the first time home buyer is 38, there's 2 decades of arguably preparation that somebody's going to go through to get to that place where they're buying their first home. And they're not just going to wake up on a Saturday and say, okay, I'm going to go buy today. They're going to go through probably months, if not years, of learning and preparing, right? There's just not in my mind, there's not a better resource for that person to learn from than a local mortgage professional who's going to really gear their education and preparation for that event whenever it happens. But yet today, I still talk to loan officers every day where 80 or 90% of their business comes from the referral from an agent. Not saying that's a bad idea, by the way. But if that's the first time you're being introduced to a consumer, is when they have contract in hand, anxiety and stress are already at a high level. It's no doubt that's why we see that 107-point difference in satisfaction from quote unquote point of sale versus point of thought engagement. Am I missing something, or is there more to that data point than what I just kind of laid out.
No, I think that's, it's a great point that you bring up about what you can do, and there are things out there. I spent 12 years in the industry way back when. I don't want to talk about how far back when, but some of the people that I worked with are still in the business. So that says something. But I attended, a home buying seminar that one of my former colleagues put on a while ago with a real estate agent and an attorney. And it's something that I looked at and said, this is the same thing we did, 20 plus years ago. Today, with what's available, what people like Kristen and those folks are doing, what you've put together with FinLocker and some of these other things. These are the things that should be in front of those audiences. Younger people are more visual learners, and everybody's more visual learners. And the lack of visual aid and I'm not talking about great technology or great marketing or things of that nature, but being able to really explain things in easy, understandable, visual settings really sticks with people, because people, when you do things like this and they're reading small print and stuff like that, it just doesn't translate into something that they're going to retain. And there's just such an opportunity to do that based on the questions you hear. I'm always surprised, and I'll talk to people who are very, financially sophisticated, but they know very little about the home lending business and why it works the way it does, because it is very complex. The secondary market requirements, that Fannie Mae, Freddie Mac guidelines, and this whole thing, which drives a lot of the experience. So you have complexity on the back end. You're going to have some complexity on the front end. And the job right now, I think, is to make that simpler and easier to understand. But not only that, but convert that understanding into actions that people can take to better position themselves as a buyer. And that's what's going to be remembered. So I think there's a lot of opportunity there. Some of the other things, for instance, that we see in younger buyers, they shop more often. So you talk about the need to get into early, engagements, because those folks tend to look around less. It's even more important with younger borrowers because, on general, they shop lenders more often. The other thing is they rely on referrals more strongly than their older counterparts do. And that's both friends and family, first and foremost, but also real estate agents. So they will look to others, and they rely on those referrals when it comes to actually choosing a lender. But that's how they hear about lenders. So you have to be engaged in all these different touch points. And they are very, very interested in all homeownership advice. So about costs, about, other things you need to know. And this gets glossed over. We talk about this with servicers all the time, and how to build trust with your servicing clients, and so that you're the first call they make when they think about refinancing. But a lot of this information that doesn't get exchanged, certainly for first-time home buyers, is valuable, because they're going to learn it the hard way. And it's better if they learn it from you up front. And there's just a lot of opportunity to educate. And I think in this environment, what we're seeing is especially appreciated, and it is expected at some level. So, that's something that folks really need to get behind.
I'm curious, like, how you think about social media, and then if there's anything in the data that's starting to come to light in terms of how this next generation of home buyer leverages social media for learning, and maybe that social proof of a lender or loan officer.
So we've just added some more detail around that channel. We have some basic information on it. So the internet, is this broad bucket. So we had to move away from that sort of distinction, because everyone sort of interprets that a little bit differently, but to specific channels. Because what we're seeing is specifically in YouTube and TikTok, younger borrowers spend a lot of time on these platforms, and even Instagram to some degree, less so with Facebook. That tends to be older groups from what we're seeing in our data. But that information that's going out there, and there's a lot of misleading information, as you might imagine, but they are spending a lot of time in there. So those are opportunities. And I think today, from what we've seen, because none really stand out, it's just this ability to gather information from different places. It's definitely there, and they're going to use different social media channels to get it. We've got some new questions going out where we'll be getting a little more detail on that. But if you're not using a multi-channel approach, then I think you're cutting off some of the possible eyeballs for what you're putting out there. And you've got to touch them all, and you've got to be, as some of you guys that I've seen make great use of social media, you've got to be out there consistently. And there are plenty of tools, I think, to help you manage that today. But it's a big part. Digital interaction and engagement is key. You can't rely on the referral if you can get that interaction and the referral at the same time. Think about how powerful that can be.
Yeah. I've heard you talk about, we've talked about Rocket, and we talk about them a lot, and deservedly so, right? They're, year over year, they've been at the top of the JD Power servicing and origination surveys, right? Always consistently up there. I do remember a time though that they weren't. And so I know, and I'm in Detroit, a lot of friends that have been around that business for a while. I know they put a lot of energy in their building out their processes and partnering with you all in a strategic way to improve how they show up for their consumers. But you've also I've heard you lately talking about Veterans United, in a similar vein in terms of how they're showing up in the stats and in the results. What can the local loan officer lender learn from these, massive companies that they could actually put into practice in their own business to show up better?
I think one of the things, and the two things, those two organizations do a great job. And I think one of the reasons behind that is, like, they're both more of marketing organizations than they are of lenders.
Yeah.
So their focus is on finding and engaging customers. And they happen to have, a mortgage capability tapped to it. And if you don't know much about Veterans United, they dominate the VA lending business now. They have a really fascinating story about how they started, how they grew, and things like that. And they're a unique company, and that they are the epitome of that model. I mean, they literally were successful marketers who sold a business and looked for another opportunity, knew nothing about mortgages, knew nothing about VA loans, and said, "Hey, I think we could do the same thing in this business," and then picked VA loans because it was a difficult product to scale up. And if you look at where they are now, they've scaled it up very successfully over the last 5, 6, 7 years. So I think that attention to that customer interaction really makes the difference. And if you're going to build on something, that's something to build on. The other thing is that they manage the process and don't manage the people so much. So the people wind up being part of the process and are the process, but really strategically, they look at perfecting the process. And it's a different point of view than a lot of your larger loan officer dominated lenders, because their success has come from successful loan officers. And that doesn't mean one's better than the other. But I think as we get into a more mechanized lending operation, you're going to have artificial intelligence behind the scenes, and eventually at some point facing customers, process becomes more and more important. And then the individuals play an outsized role between those processes. And I think that's where the local advantage is. And what we've seen over the last year and a half is every wave, we do 4 waves of data each year. Every wave, the average satisfaction has gone up, and it's on an upward swing, and it's even more significantly up halfway through this year. And you've seen that driven more by your distributed retail lenders. So that local connection is very strong, and it's playing very well in this market. And, talking about Rocket, has dominated servicing in our study, but they have not won an origination award since 2022. So since 2023, it's been a series of other companies up there. 24 was First Fairway. Then last year prosperity, and we will see this year. But you can see the kind of shift, first in the product, more purchase than refi, and secondly in the business model. So I think that advantage is there, and it has to be continued, I think, to develop it in a new environment, which is going to create some efficiencies in the digital world. That there's no reason you can't match that and combine that with that local expertise.
So if you were coaching a loan officer who is just starting in the business today, and by the way, you might be, because there could be a loan officer watching this episode who's literally just got licensed. So we might be coaching somebody up. What would be one thing you would tell that loan officer to do differently than their predecessors, right? So think of this as a 25-year-old fresh out of college, inspired to help people achieve the dream of homeownership, becomes a loan officer. What's that one thing you would tell them to do?
Well, when I first started out, I did start in sales. We all started in sales. I started with a very small company that we grew up to be quite large, actually. And I was given the Freddie Mac Seller Servicer Guidebook to read, a Hagstrom's map for you old enough to remember what an atlas actually was,
Oh, yeah.
and then match out on there where the real estate offices were, and get out on the street and start banging on doors. So I would not do that today.
Well, nobody's in those offices if you were going knocking.
Exactly. So you need to be, I think, really work on how to engage, first of all, people at a business level. So you had to find those realtors. You need to hopefully have access. There's so much available data now that we never had in the back. So who's doing business and who isn't. You go into an office, you spent 3 weeks talking to the guy who made closed one sale in the last 6 months, and you're like, oh, I didn't know that. No one told me that, and they're all snickering in the corner. You don't have time for that. So you're out there, you really need to know where to focus your efforts. And I think you just have to be that much better at talking about value. And the value for the borrower is different than the value for the realtor. And it's different for the accountant or the attorney. And you need to, I think, touch base on all these different ones. We used to talk about that back in the day, but everyone went to the real estate agent because they were the focal point.
Right.
They controlled the transaction. But now I know accountants, I know financial planners, and they have people that they work with, and they're in front of those relationships. So by the time that potential buyer borrower gets to a real estate agent or to a lender, they're already locked in on what they're doing because they've got that solid referral. So you need, I think, when you start out, you need to be touching all those different areas. You need to understand your local market, and you need to start making educational interaction. And I think we used to do that a little bit, and that's something that always worked well for me because of personality wise and things like that. Some people are better at it than others, but I think everyone needs to do that to some degree. You need to touch the different people, understand where they're going to come from. I mean, there's just so many opportunities, and how to do that now. And you can use social media to do that. You're not going to be doing as much in person, and a lot of tool there. And I think younger people are much more conversant in the social media world,
Right.
and they can get up to speed faster there. But it's sales. So you also need to keep those, those tried and true sales techniques and skills honed. But I think what you're doing more is spending more time focusing on outcomes, what value means to each of those different constituencies. And you need to spend time developing all of those, because no one's going to dump a bunch of leads, in your lap. I think at this point, you're going to have to generate your own, and and it's costly, right? You hear that from everybody. So the more grassroots you can develop to, augment whatever you're getting through that company that you're working with, is going to get you up the curve faster. And I think you really have to focus.
It's really fascinating, Bruce, that it's like Back to the Future, right? If you think about like a lot of the tactics and strategies that you've laid out and we've talked about here, we could have had this conversation 15, 20 years ago, right? With traditional BNI groups and, you know, it's still all about showing up and making people aware of what you do and how you serve your community. That's really the you know, the number one thing that any loan officer needs to be doing, especially someone that's new to the business. People need to be aware of what you do and how you bring value to your community. Period. End of story.
Yeah, and I think you have to look at your value as something beyond delivering a loan, because nobody who comes into this, I mean,
Yeah.
this gets talked about a lot, and I think what happens is we don't quite put that into play, every day. And I think you need to do it every day
Right.
and remind yourself, this person is not after a loan. They're
Yeah.
after that house. They're after that new kitchen. They're after, a lower payment. Whatever they're after, you need that story of how you're going to do that and help them understand what's entailed. Because otherwise, you're simply a transaction provider, and then all that matters is what's your rate? What's your
Yeah.
rate? What's your rate? And you're in this business. There's always somebody throwing out a ridiculously
Oh, yeah.
low rate that you say, oh, they could never do that. But the consumer goes off there and learns the hard way, and you don't have a loan. So
Right.
you need to differentiate yourself from that, and you do that by really focusing on value, and education is a key part of that value, right?
I think to me, it's everything. It is the education leads to lowering the stress level, lowering the anxiety level, creating more certainty and confidence, which everything goes together. And I mean, your data shows this. If you do those things and you do them early in the consumer's journey, you're going to be 107 points better than the guy that's first facing off with the consumer at the point of sale. It's just I'm excited for the future of our business, because I do think there's an opportunity for those originators that have a servant heart, that lead with education. I think they will be the winners in this next generation.
I agree. I think, there's a lot of talk about what may or may not happen. And a great example is when we had the National Association of Realtors, the whole settlement. It was like, oh, commissions are going to go here, they're going to go there, and now you're starting to see reports, and they haven't really changed much, because the process hasn't changed.
Right.
It's not about the commission, it's about the process. So how do you go about getting what you have to the customer? And that really hasn't changed. When that changes is when I think you'll start to see maybe some really significant changes. And that can happen. Technology has done that in other areas. It hasn't done it here. There's a lot of local advantage here that's hard to replace with technology.
Yes.
I would never say never, because you've seen some advantages here. And my guess is it's some kind of a hybrid sort of mix as we go forward. But the better that the big guys with the money scale up digital interactions and digital capabilities, there's a bigger risk to the local guy. Because if you look at trends and consumer trends, outside of finance and other areas, the things that take hold are based a lot of times on simple convenience. If it's easier to do and easier to do, people migrate to that. And
Yeah.
if you look at a process that's not so easy to do, there's opportunity. It's a big, I think, challenge. But if that's really starts to be driven in, and one thing you can't take from Rocket is they have done and executed at scale. So that's built into their DNA. I'm not saying they're going to pull this all off, but if anybody has a chance of doing it, they're pretty well positioned to do that. So take it seriously, do it, what you can do, because I think there's an inherent advantage locally. And you need to, if you don't sort of maintain it and feed it, if you will, you're going to lose it. And that's where I really think that the future lies.
Bruce, I'm so glad that we were able to do this again. I'm going to remind myself maybe in another 2 or 3 months to have you come back on, because you'll probably be in the third wave by then, and there may be even be more insights that we can kind of get into. But again, I love that you're showing up in the industry, and you're helping the industry and the loan officers specifically understand the plays they should be running to win in their community. I'm a huge fan of JD Power. Love the reports when they come out. I can't get enough of the data. And again, I appreciate you sharing your insights here with our audience on Loan Officer Life.
Well, as I said, I appreciate the opportunity to talk a little bit more about this. I think a lot of what you've talked about, what you're working on, aligns with what we're seeing, and so I think that confluence is something that's important. We will have our final servicing study, results out in mid-July, so it'll be interesting to tie some of that back. We're seeing more and more connection between servicers and originators in the reverse, not so much, originator to servicer, but looking at servicer back to origination. So we're taking a different look at that as we go forward. It'll be interesting to see what we're seeing happen there with that customer.
Can't wait for that. Thanks again, Bruce. Hey, everybody, make sure you're back here next Friday for our next episode. And we're on the heels, or we're walking into the Memorial weekend. So everybody have a great long weekend. We'll see you back on Loan Officer Life. Thanks, Bruce.
Thanks, Brian. Take care.